Hello and welcome to Financial Technology Frontiers Live. And we have this wonderful guest who is our favorite when it comes to knowing about the latest trends in the innovations in the banking and financial services. A banker himself with 10 plus years of banking or 15 plus years of banking, he is guiding the world in terms of what is going to be the future of technology in banking and financial services. Friends, join me in inviting Mr. Paolo Sironi of IBM, who heads global innovations at IBM. He is also so-called professor for the banking industry
Hi.
when it comes to sharing them with some of the latest in the innovations in the financial sector. Welcome to Financial Technology Frontiers, Paolo.
Babu, thanks for the great introductions. Let me say something. Sometimes I'm called professor. I don't teach. I used to teach at university too, but I wouldn't call myself a professor. However, I publish research and deep research also in theory of banking, economics, and technology. And you know why? Because the change required for the banking industry is similar to the shift that happened when we were producing energy with carbon, and now we want to use other methods, being clean energy or nuclear energy. We need to change the physics theory to do that, otherwise it would be very extreme. So now we pretend to rebuild banking with technology on the same theoretical foundations of the past. In reality, we have to get a better understanding on how the world works also in terms of the generation of value for people, thinking about what happened in banking in the last 70 years, and therefore we see how to unlock that value with technology. So I think the theory is important because it's positive
Absolutely.
theory that leads to business models.
Absolutely. Ultimately, it is all adding up of value that matters. And the more value you add, the more accepted you are in the fraternity. Well, Paolo, you have come up with some very interesting research from the part of IBM into 2024 Global Outlook for Banking and Financial Markets. From this research perspective, as well as your understanding in the market, how do you see is the trend of technology purchases changing in the banking and financial services with the advent of all these new technologies within generative AI, with blockchains and all these things coming into the picture? What kind of pattern do you see in technology purchases change in the banking and financial sector? And where is the technology going now?
Thank you for this question because it helps me to set the stage in terms of our thinking about what is really changing now in terms of investing in technology to transform the banking business. And the global outlook that I have here is a yearly edition. The 2024 edition is about regenerate banking with AI. So in particular, looking at generative banking within the AI, sorry, generative AI within the AI family, how that intersects the economic model of banks. So we know that the business model banks across the world hasn't worked as in the past at different speed, in particular looking at the European banks and Japanese banks where negative interest rate had the largest impact. The economic model is really tensed, so it's not working well. And that requires a transformation of banks. So the first thing that banks thought of doing, but it goes everywhere in the world, is okay, consumers are more and more inclined to access banking on digital. So we need to have to create digital apps to run banking. I see more of a lot of people moving from branches to those apps. So how do you operate them? Well, I think that's a digitalization outright effort. It's like you need cloud technology or hybrid cloud, as we understand it now, in order to power up those connections on the mobile apps, which is a new technology compared to the internet on the website and whatever. So that's when 10, 15 years ago, banks started talking cloud. Regulators were concerned. Banks didn't know what to do. 15 years after, we see that all banks are going on cloud. So those are the core investments, the cloud transformation. That is digitalization outright. At a time where people move to apps, therefore you need the cloud as an architectural investment. But that investment did not resolve the problem of generating effective value for clients apart from the convenience of accessing basic transactions on cloud. So banks then learned through time that cloud was not enough. They had to invest in artificial intelligence, like more traditional deterministic methods and machine learning in order to personalize. And that is when digitalization outright was coupled with personalization through AI. You need to remove the friction when people are on your digital banking app, like uploading documents whenever is needed or parsing them. And you need to make it more personal, more relevant for the individual, because your iPhone screen is very busy. There's so much going on there, right? So it can be confused. So AI and machine learning were needed to make it more personal. But still, that didn't power up a mobile banking or neobanking in a way that can be really economically sustainable, because there is a limit on how you can engage clients using, if you like, cloud architectural foundations and more traditional AI capabilities.
When it comes to personal digitalization, personalization, communication, adoption, and from then comes the risk management also. So, what are the new paradigms that are happening in the area of risk management then in this age of generative AI? What are the kind of emerging risk patterns?
Babu, in the 1990s, I was head of quantitative risk management departments, market risk, counterparty credit risk, and also the risk for the retail clientele in terms of investment management. And I remember that there was a motto that was going around that was picked up strongly by some relevant banking CEOs. People used to say that every banker had to be a risk manager because risk management is the core of banking. Now, today, every banker must be an AI risk manager because AI is really taking center stage in terms of transforming the way operations work internally as well as facing clients. And AI in particular, thinking about generative AI, is probabilistic technology in the way it works. So the algorithm are not deterministic actions and roles. So the risk is always there, and you need to basically understand them in order to use the technology, because the technology must be used. It's a competitive landscape, but you need to be able to risk manage it. Now, what does that imply in terms of your strategy? Back into the 1990s, banks divided into two groups. I saw those banks where the bankers wanted to be, if you like, at the forefront of the latest innovative models in terms of financial innovation. You remember the securitization, the CDOs, the CDO squares, whatever. And emphasis by some institutions were put on the individual analytics, like a show off of like I say, quantitative prowess. Other institutions instead had a more sober approach, like the question, and that's what I was doing, was can I have an architecture that enables me to understand what goes on? Because in good times, risk management is a buy side thing, okay, is an ex post. But when the problem occurs, then is when you really need to be able to manage a system. So your sophistication might collapse because you cannot run it. So you need an architecture that enables you to understand what happens. Now, through the financial crisis, we exactly saw that a lot of these models were not working. Bankers were not knowing where they were going to. They could not assess their P&L in trading operations. And many of those super banks basically got troubled and defaulted. Others were more sober and survived. So now we're at the same stage. There has been a lot of excitement about AI and generative AI, but some were focusing on if the latest and greatest of the model. In reality, we know that no model is fit for purpose, is working everything for everything. It has to be fit for purpose. So what is now coming to be realized, and not new for me, for us in IBM, but to the world, is that what you need is a platform that enables you, through an architectural perspective, to empower every banker to be an AI risk manager, to deal with the problem of defining the value, understanding the complexity, and managing for risk, which is about security as well as bias, hallucination, and an extended supply chain for the AI. But that is an architectural perspective. Now, if you ask me, and if you don't ask me, set the questions, are banks effectively there en masse? Well, in this global outlook, we asked the 600 executives, head of data strategy and AI, thinking about generative AI for the moment. if they are intending to go live or they're live with some use cases out of some that we define for them, if they don't intend at all to work with generative AI, if you're just playing the game a bit, and only 8% of the banks, but still is a number, are systematic in their approach. That means they're now investing to work on a variety of different use cases with Gen AI across the whole organization. That means they're starting to think platforms and architectures, which is the foundations of a governance that is practical. It's not just theoretical, that can enable them to move forward. While 14% of banks don't intend to work with generative AI currently, in any form, and 70% are live or about to go live with a use case, but very tactically, sort of starting here, starting there. But again, without the consistent architecture and platform foundations, it's difficult to justify the return on investment on any individual use case and to scale those up in the organization enterprise-wide. So this is the time where, in order to make it happen, we need to restart thinking architectures and platforms as it happened in the risk management world in the 1990s and early 2000s. The jury's out there.
Let me just come to the other aspect of it. One of the most important thing is the people aspect. Okay.
Yes.
And the workforce is also changing consistently when it comes to, the adoption of AI. How are organizations reimagining the workforce, which many a times see at times that many of their tasks have become, really replaceable by that of AI? And then how are they being redeployed? And how are you boosting productivity and rebalancing the costs there?
Is a super important question. And on the side of the Global Outlook, we also released a paper together with the research unit of Barclays that we launched at the World Economic Forum, the AI revolution, the productivity boom and beyond, that tries to tackle also these questions from a macroeconomic perspective. But why I invite you to read the paper as well, and then you will start going down to the micro, I started answering the micro level for you. Now, AI is not going to replace everyone's job. In some cases, it can happen, but that's not the point. The point is that people who can work with AI will advance compared to people who can't work with AI. Right. So on the one side, we need to learn how to use AI, but on the other side, we need to be given the opportunity to work with AI. Now, what does it mean to be given the opportunity? It doesn't simply mean that institutions have to invest into that. They have to resolve some critical elements that enable everyone to contribute or not. Since 2016, we ran a survey on 3,000 executives worldwide about the skills that are most important for the workforce. And we had 12 of them, like STEM, basic IT skills, time management, creativity, and others. And in 2016, the consensus was STEM was number one. Creativity was sort of a number 8 or 9, if I'm not mistaken. Now, there might be an idea that engineers are not creative. I don't think that is the case, right? But one is up, the other one is down, and then you had other elements. We ran it in late June 2023, and you know where STEM sat out of the 12, started from number 1 in 2016, the 12th position, together with basic IT skills. Where was creativity? Number 8, number 9 remained there. What went up, number 1 and number 2? Well, prioritization, time management, teamwork. Why is that? You need to understand this as a flux. Not because it's not important to understand STEM and engineering, right, and complex mathematics. I think the industry is coming to the realization that the complexity of the industry itself, the business model, the operations are such that even if you had more talent and more technology, you're not moving the needle. How often have you heard in the last years, I tried to innovate, the budget was precluded because of this, because of that, right? We hired talent and they could not contribute because the foundations were not as such. Simplification happened before, and a platform was created to enable them to share and to basically mutualize elements of value. And therefore, it's not just looking for people that know how to teamwork or how to prioritize, it's giving them the capability to basically do that technically, right, as a team. And therefore, you will see that things like STEM and stuff will start becoming more relevant again because they can now contribute. So the question is, and the answer, let's understand how to change the operating model and simplify through a business perspective the operations of a bank. Because that is where the complexity goes down as AI and generative AI is demonstrating that it's growing in importance, and you start matching them to transform so that everyone that is willing to contribute more will be put in the position of contributing more. Otherwise, we ask people things that they cannot deliver because we don't give them the platforms and the simplification needed in the operating model for them to succeed.
Now, just coming to one more important aspect is ultimately how much of AI is too much? What kind of governance is going to be important to make sure that you just have the right kind of AI in place and we don't overdo it, and at the same time we just have enough to make sure that our work is uh, adding value. What is
Yes.
your thought?
Generally speaking, governance is about four things. It's about managing for value more than ever because generative AI might transform key elements. So we need to understand, okay, how the value is generated going forward. The second is manage for complexity. Is the organization ready to adopt the change in the way they work? Do you have enough access to data? Do you have a data fabric, or can you basically build a data lineage? If you can't, right, it's more complex than ever. And the third one is to manage for risk, which is cybersecurity, bias, and hallucination. And once these three elements are, if you like, understood, addressed, or an institution knows how to address them, that is when the institution can do the first step, the fourth step, which is manage for scale. So basically, the governance can become an element of transformation enterprise-wide of the organization. Now, that is a complex journey because it requires many cultural changes to be made. But there's one that is foundational to all of them, which is transparency or hyper-transparency. And I think that generative AI is providing financial institutions as a reverse effect that opportunity. Like you would not trust technology of this kind if you cannot build it in a very transparent way, not just for the consumers, and it's super important, but also for the bankers, because now you have algorithms that run important elements of organization. You need to know that what goes on is what you expect that goes on, right? So you need to be more clearer than ever in terms of defining a strategy and building that into the platform. Because with the AI and generative AI, the auditability and accountability moves to the level of the board, right? So the board is to be more connected with the mechanics that generate the business results, right? The organization changes. So transparency is the key element that basically enables governance to be effective. But transparency is not just an element of goodwill. It requires architectures and platforms that enables you to enforce transparency in every technical element. You see that we go back to what we said at the very beginning. It's not about the algorithm itself. It's how the algorithm is built on a platform that enables you to transparently understand every step of the process so that you can run it. It means you can apply governance to it. So it's a positive, practical governance. It's not just a theory around it.
Super. You have given a lot of insights into the technical purchase side, or what is going to be the future of technology adoption and purchases in the sector. We came to human resources, we came into risk and compliance, we also spoke into governance. Now, in this entire journey of the banks or financial institutions, you have come up with some very interesting 10 guiding actions for a bank to identify its AI priorities, and then adopting it and scaling it up to the next level of growth. So what is the kind of guidance that you are preparing for this for the financial sector?
Well, it is always a continuum, right? Because technology doesn't live in a vacuum. To generate value needs to apply it to the deep economic problems of the organization and the business model of a bank. And as organizations are more conscious about themselves, identify new opportunities or reveal more risks, you need to start the process of how do I apply it, how do I scale it, how do I make it part of an integrated process. So there are three steps that aggregate 10 actions that you can imagine is a process of every year from January to December, but in reality is a continuum that enables you to systematize your approach. One is the exploration, the second is integration, and the third is the scaling. So you always need to explore your priorities, what technology can do. They can be changing, but you cannot do everything at the same time. Once you understand which are your priorities, building your perspective on the trade-off between value, your risk appetite and the complexities that goes around that. You start integrating, maybe starting from smaller use cases, but with a perspective of doing more. So the integration means how do I deploy it? How do I build my practice? How do I access a platform to make that happen? And once you do that, then you can scale them up. But you can only do that when you have foundations that make sense. And then you restart the process with a second one, but at a higher level because you got the lesson learned that became practical culture in the organization. So it's a continuous process of exploring, integrating, and scaling. And as long as you're clear about what it takes in every step of the process and give enough freedom for those fringes, which are effectively way more innovative, they cannot be standardized. You can basically get two birds with one stone. So you can be innovative, but you can systematize your risk management approach to innovation in a way that you're comfortable to generate value facing the risks that are part of the business. So that's what basically we try to explain at the end of this 2024 Global Outlook, Regenerate Banking with AI.
Superb. That was quite an interesting and insightful conversation. And of course, we probably encapsulated the entire research report of yours in this last 10 to 15 minutes. And it has been quite an interesting learning for us. Thank you very much, Paolo, for a
And
wonderful
in depth,
conversation.
the more I share, the more I learn. Thank you very much.